This presentation is informational, is not to be considered legal or tax advice. Hello, today I'd like to touch on a few of what I consider to be the most significant tax provisions that are still available for 2020 in relation to charitable donations under the CARES Act. The CARES Act, enacted by Congress last spring, included several temporary tax changes helping qualified nonprofit organizations such as your local church. Many people may not even realize it, but there's a new special tax deduction of up to $300 designed specifically for people taking the standard deduction. Since the Tax Cuts and Jobs Act of 2017, the IRS states that nearly 90% of all taxpayers are now taking the standard deduction and could potentially qualify for this above the line deduction, lowering both adjusted gross income and taxable income, translating into tax savings for these individuals. For itemized filers in 2020, qualified contributions won't be subject to limitations, and individuals can now deduct qualified contributions of up to 100% of their adjusted gross income. Prior to the CARES Act, the amount of charitable cash donations taxpayers could deduct on Schedule A was usually limited to 60% of their AGI. To qualify, the contribution must be a cash donation made to a qualified organization during the calendar year 2020. Some of the other key revisions under the CARES Act include a temporary suspension of required minimum distributions. It's important to note that IRA owners aged 70 and a half and older can still make a tax-savvy charitable donation directly from their IRA to a qualified charity, also known as a QCD. Another revision to be fully aware of is that the corporate contribution limits have been raised from 10% to 25%. As you can see, the impact of these changes could help taxpayers when they file their taxes and help many organizations as they try to help people coping with the coronavirus. Many charities are struggling this year, and donations for many are down. Now is the time for us to come together, support our community and those in need. I would encourage you to visit irs.gov for a more comprehensive discussion of these rules, specifically Publication 526, and then consult with your trusted tax advisor. Thank you and have a Merry Christmas.